Okay, so India's 2026 budget. It's really not just about numbers and spreadsheets. Honestly, it's a massive, high stakes gamble in a world that feels like it's on a knife's edge. So today, we're going to break it all down: the strategy, the risks, and what it all means for one of the planet's fastest growing economies. Let's dive right in. So let's start with a single number that basically changes everything. $23 billion. dollars. That's how much foreign money has poured out of Indian markets since the beginning of 2025. And look, this isn't just some dry statistic. It's the economic tremor that forced India to completely rethink its entire game plan. The Economic Times really hit the nail on the head here. They said the global economy is like a slippery cricket pitch. Think about it: unpredictable bounces, a ball that's swinging wildly. This budget is India's big attempt to not just stay in the game, but to smash a sixer against some really tough odds. It's a whole new batting strategy. So, what exactly makes this pitch so slippery? Well, we're talking about a few things at once. You've got slowing global trade, which makes exports a lot tougher. You've got all these geopolitical tensions creating a ton of uncertainty. And then there's that massive investor exodus we just talked about. It's not just a storm, it's kind of the perfect storm. And it forced a major, major pivot. So why did everybody run for the exits? It was really a triple whammy. First, a weakening rupee meant lower returns for anyone investing from abroad. Second, Indian stocks started looking pretty expensive compared to others. And third, with interest rates going up in other places, investors could suddenly get safer returns without all the risk. When you put it all together, the math just wasn't adding up for them anymore. Okay, so how do you even respond to a challenge like that? Well, not by just asking for the foreign money to please come back. Instead, the government rolled out this really broad industrial playbook. The new strategy is a huge shift. Look inward, build from within, and create an economy that can, stand on its own 2 feet, no matter what the world throws at it. And this six-point plan is basically a full-court press. It taps right into these big global trends, like countries trying to de-risk their supply chains. So on the super high-tech side, you've got biopharma and semiconductors. To secure all the materials for that, there's a huge focus on critical minerals. Then, to build up the real backbone of the economy, you've got to push for small and medium businesses. And finally, to strengthen the foundation, there's a revival of legacy industries like textiles and a massive, massive boost for infrastructure. It's a true 360-degree approach. And this right here, this is a huge deal. The first semiconductor mission was really about just getting a seat at the global table. Mission 2.0, it's about owning the entire table. We're talking about building everything from the ground up, from the machines that actually make the chips all the way to the intellectual property behind them. In a world where computer chips are basically the new oil, this is an absolutely massive play for tech self-reliance. All right, a big strategy is great, but talk is cheap, right? A plan is just a piece of paper if you don't put some real money behind it. So let's follow the money and see just how serious the government is about this six-point plan. And trust me, the numbers are pretty staggering. So here it is, the headline number: 12.2 lakh crore rupees. That's about $1.2 trillion in capital expenditure. To put that into perspective for you, that's more than the entire GDP of some countries. This massive injection of cash, which is a 9% jump from last year, really shows that the government is betting the house on infrastructure being the engine for all future growth. And this chart really breaks down where all that cash is headed. Just look at that huge spike for electronics components. I mean, that's the rocket fuel for the whole semiconductor mission. Then you see these significant funds for small and medium enterprises and for biopharma. This isn't just random spending. It's very targeted investment in what they see as the industries of the future. So, if you're an investor, what does all this mean? Well, this budget creates some pretty clear winners. That huge infrastructure spend puts sectors like railways, defense, and construction right in the spotlight. So companies like Titagarth Rail and Siemens could see a real boost from new train projects, while that big push for Made in India defense means everyone's keeping an eye on stocks like HAL and BEL. But, and this is the trillion-dollar question, is this the right bet? A bold strategy is one thing, but is it actually going to work? This is where the story gets, well, a little more complicated, because there's a fierce debate going on about whether this inward-looking plan can really solve the problem. The whole debate really boils down to this: how do you tip the scales back in India's favor? On one side, you've got people arguing for tax cuts. The idea is simple: lower taxes will immediately make India look more attractive to foreign investors.
But on the other side, you have the argument for stability. That camp says, hey, what investors really want is a predictable, stable, growing economy, not just some short-term handout.
And this is where the critique gets really sharp. Professor Surajit Mazumdar points to a pretty worrying trend. The government's tax revenues are actually growing slower than the overall economy. Now, why is that a red flag? Because it suggests that the real economy, on the ground, might be weaker than the big headline numbers are telling us. His term for it, a near deflationary situation, is a serious, serious warning. So this critique points to some deeper issues, things like manufacturing's share of the economy not really growing. Overall investment is actually down from its peak, and growing inequality could end up choking off the very domestic demand this whole plan is trying to create. The big question, then, is whether this budget is just papering over the cracks or if it's actually fixing the foundation. So we're right back where we started, on that slippery cricket pitch. India has stepped up to the crease with a bold, really aggressive strategy. It's betting on itself to hit a sixer right in the face of a global storm. But the pitch is still tricky, and the bowling is fierce. Is this going to be a match-winning shot, or is it going to be a swing and a miss? Honestly, the whole world is watching to see how this high-stakes game plays out.